Welcome back to the Crypto World channel, everyone. My name is Josh, and right now, Bitcoin has officially closed 10 green days in a row. There's only ever been one other time in Bitcoin's entire history that this right here has actually happened. So in this video, I'll be going over what this means for Bitcoin. I'll be taking a look at the last time that this happened for Bitcoin. I'll also be talking about the potential breakout of this massive resistance range right here, which of course we are testing right now. And I'll be talking about the Bitcoin Fear and Greed Index. All that and more in this video, so make sure you're watching all the way to the end so that you're not missing out on any of this important information. And if that sounds good to you, just before we jump into it, make sure to leave a like on the video down below. And if you're new to the channel, make sure to subscribe to the channel with notifications turned on so that you're not missing out on any of these future videos. But with that out of the way, let's get straight to what this video is about. So first of all, zooming into the 4-hour chart. Now, over the past 4 to 5 days approximately, I have been saying that Bitcoin is due for a bit more of a cool off here in the short term. It was right at that peak just there, roughly around 5 days ago, once again, where I did actually call for a bit of a short-term cool-off. So even though the upside price action has definitely slowed down here in the short term compared to closer towards a week ago just here when we experienced that short squeeze just there, for as long as the 42K level is still resistance, it would still make sense for Bitcoin to cool off here in the short term once again. I've said almost every day over the past 2 months that if we can get a confirmed break above 42,000 US dollars, then I would flip much more bullish on Bitcoin. Now, of course, the price over the past 1 to 2 weeks here has been very bullish, and we are in a 4-hourly uptrend. And so technically speaking, the trend is your friend, and of course, we're continuing to form higher lows and higher highs. But taking a look in the RSI here on the 4-hour chart, we have actually formed yet another bearish divergence. As you can see just here in the price, we have formed higher highs, but in the RSI on the 4-hour chart, we have formed lower highs. So that is a bearish divergence. And so what it basically means for the Bitcoin price is just in the immediate short term, we are due for a little bit of sideways price action, if not slightly to the downside. You know, something like what we saw a few days ago just here. Once again, we did actually see a bearish divergence just there, and that led into pretty much some sideways price action and slightly to the downside. And what we saw just there around 2 days ago, that's normally what I expect from a bearish divergence. So look, it's totally possible that Bitcoin can just continue to pump to the upside here and immediately break above this massive range of resistance. That is totally possible, but it would be much healthier for the Bitcoin price if we can actually see a bit more of a cool off here. Once again, considering the fact that on the daily chart, we have now seen 10 daily candles in a row close green. And so what we need to realize is this right here, the 10 daily green candles in a row, is extremely rare in Bitcoin. As in, it's only happened one time in Bitcoin's entire history before this time. So this is the second time that this has actually happened. Now, it does actually depend on what chart you're using, on what exchange you're using, because of course, exchanges have slightly different prices. So for example, here on the Coinbase chart, this is the Coinbase chart on the daily chart, zooming back out throughout Bitcoin's entire price history just here. This actually takes us back all the way to around the beginning of 2015 is as far as this Coinbase chart goes, the beginning of 2015 once again. And so throughout this entire price history since 2015, there's only been one time in the Bitcoin chart that we've actually seen over 10 consecutive green daily candles in a row. And that is right here, pretty much in the middle of the 2017 bull run in around April to May 2017. In fact, from the 23rd of April 2017, we saw 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days in a row that closed green. So yeah, once again, that took us from the 23rd of April 2017 up towards around the 4th of May 2017 was the last green candle. And then we snuck in a quick little red candle here on the daily chart before another 6 green candles. So of course, during that time period just there, Bitcoin was incredibly bullish because of course, that was in the middle of a major bull run. So after we saw all of those bullish candles back there in 2017, what happened next was once again, just some short-term cool-off periods where we basically just consolidated sideways for the most part. You know, this time, for example, we pulled back a little bit to the downside, but nothing major. As I've said on the channel recently, I do not expect any major crash. Ever since the initial crash to the downside around 2 months ago when we bottomed out at roughly around 30,000 the first time round, I said on that day 2 months ago that the worst of the crash is behind us, considering the fact that that was roughly around a 50% crash for Bitcoin about 2 months ago, once again, from around 60,000 to 30,000. So another 50% crash would take us down towards 15,000. And as I've mentioned in previous videos over the past couple months, I saw that as a very unlikely scenario. So as I've explained in my recent videos, anytime I'm talking about potentially bearish price action in the short term, that is only in the short term and it is not a major crash. It would only be, you know, slight consolidation areas like this or slight little pullbacks like this. Because in the longer term, I do expect Bitcoin to continue pumping to the upside like what we were during the middle of 2017 just here. Now, taking a look at this Bitcoin chart, this is the Brave New Coin Liquid Index. This is actually the Bitcoin chart with the longest price history. Zooming all the way out, this actually takes us back all the way to around the middle of 2010. So once again, this chart, which goes under the ticker BLX on TradingView, gives us the longest price history for Bitcoin. And going back to that 2017 bull run just there, in around April and May, right there, as you can see, we do actually have a little red candle on this chart, which breaks up those consecutive bullish candles. So on this Bitcoin chart, on the Brave New Coin Liquid Index chart, we actually did not see 10 consecutive bullish days back then in the 2017 bull run on this chart once again. But considering the fact that this chart goes further back from the Coinbase chart, we can go back even further and take a look at some previous price history. So taking a look at Bitcoin before the first halving even happened. The first halving was roughly around November 2012. And zooming into this area on the chart right here, this is August 2012. From the 7th of August 2012 up to the 17th of August 2012, we saw 10 consecutive green candles on the daily time frame on this Bitcoin chart once again back in 2012. So this actually gives us a second time that this happened for Bitcoin. So on this chart just here, this is actually the only time Bitcoin has closed 10 daily candles as green consecutive daily candles. Because of course, once again, in 2017, this chart did not show all of those consecutive green daily candles. But on the Coinbase chart, it did show that for 2017. But of course, it doesn't show the 2012 price history because the Coinbase chart only goes back to 2015. So whether you're looking at just the Coinbase chart or just the Brave New Coin Liquid Index chart, either way, there's only one other time in Bitcoin's entire history on each of those charts that Bitcoin did actually close 10 or more daily candles in the green consecutively. So we are more than due for some sort of red daily candle actually form here. Now, of course, we can continue to form green candles. That's not impossible. But once again, it would actually be really healthy for Bitcoin to just fit in a couple little red daily candles here. It could even just be one red daily candle. Because what we also have to consider is the Bitcoin Fear and Greed Index. Of course, when Bitcoin was at around 30,000 US dollars trading at these extreme lows just here, especially after that massive crash around 2 months ago, we were at extremely fearful levels in the Bitcoin markets. This, by the way, is talking about the majority. And as you can see just here, even just last week when Bitcoin was closer towards 30,000 US dollars, the majority were extremely fearful for the Bitcoin price. And of course, the majority are usually wrong. When everyone is really fearful, that usually means the Bitcoin price is starting to bottom out and we are about to head to the upside. But on the flip side, when everyone's extremely greedy, especially when we're at all-time high levels, when everyone is just FOMOing into Bitcoin, that usually means that we are due for a bit of a short-term pullback or at least some sort of consolidation area. And as you can see right now, the Bitcoin Fear and Greed Index actually shows us the first greed signal that we've gotten in quite a while. In fact, to be exact, the last time that we saw a greed signal flash on this indicator right here was actually back on the 12th of May this year. And taking a look at the Bitcoin chart on the 12th of May, that was right here. So once again, we had some bearish price action leading into a nice strong bounce here for Bitcoin. And there were a lot of people beginning to flip bullish again on Bitcoin at that stage. And that's just when more bearish price action was just around the corner as soon as everyone started to flip greedy, as they are right now. But once again, I do not expect any sort of crash like what we saw a couple months ago just here. If anything, I would expect, you know, some short-term consolidation in around this area. And we still actually have to be paying attention to the 21-week moving average right here. That's coming in at approximately 45,500 US dollars. Because taking a look at this moving average throughout Bitcoin's history, right here in 2019, roughly around September 2019, we broke below this exact moving average. And at that point right there, we did actually enter into a bit of a short-term bearish time period in the Bitcoin chart right here. Now, long term, once again, if you were simply just dollar cost averaging and holding for the longer term, you would have done very well. But keep in mind, we did have that initial crash to the downside. We had sideways for quite a while, and then we saw a major move to the upside right here, and we still found strong resistance along the 21-week moving average that actually led into another decent pullback here in the Bitcoin price over the next few weeks. And going back to a little bit before that, when we finally broke above the 21-week moving average at the end of the 2018 bear market, market. This was actually in around March 2019. We finally broke above this exact moving average, and basically as soon as we did that, even just over the next few days, the Bitcoin price began to explode to the upside, and over the next few months, it continued to explode to the upside. So this is also a major moving average that I am paying attention to right now, and I have previously mentioned this on the channel as well. So once again, that is coming in at approximately 45 to 45,500 US dollars. Obviously, it's changing over time slightly, but I will continue to update you guys on this moving average and on the other indicators that I am using on the Bitcoin charts. And I also want to hear your thoughts on the recent Bitcoin price action in the comment section down below. Let me know if you guys think that there's going to be a continued pump in the short term, or if we could experience a bit of a short-term consolidation slash pullback. I would be interested in hearing your thoughts in the comment section down below to get an idea of the market sentiment as well. But anyway, that's just about everything I have to say for this video. I hope you all enjoyed the update, and I hope you got something valuable out of this video. And if you did, make sure to leave a like on the video down below. And if you're new to the channel, make sure to subscribe to the channel with notifications turned on for more videos like this one. We're slowly getting closer to 50,000 subscribers, and that is just a crazy number. I can't even believe I'm saying it. And I've only got all of you to thank for it. Seriously, if I could thank every single one of you personally, I totally would. So yeah, I just want to quickly say that I truly do appreciate all of the support that you guys show on these videos every day. But anyway, that's really everything I have to say for this video. Once again, I really hope you enjoyed, and I will see you all in the next video.